Hi, thanks for tuning in. This is the US Futures weekly chart analysis for the week ending 14th of February 2025. First chart is the US dollar index futures. You can see that price closed slightly lower this week. The market has been weak more recently, particularly following this bar, where you would have expected a test for supply and attempt to push higher if the market remained strong. But there was only a slight push higher here and then a failure on still above average volume, and price did close below the previous lows here. This is not really a breakdown, it's a minor breakdown within the range. Just so you can see where we are, overhead resistance is expected up here. There's sort of a void in here where lower supply is expected. And this is the current trading range with the highs of the trading range here in a darker colour. And you can see the market's made an attempt to break out and push higher. It just moved into the zone above and it did draw out some supply. Price pulled back and we're currently attempting to consolidate back on top of the old trading range. The lows of the range are really coming through here just below 106. So if price did break down here, it would be a minor breakdown within the range. And at this point, the market is just threatening to break down. It hasn't done so yet. So it could recover at this point, and it wouldn't surprise if it did. But there's no doubt that weakness has emerged. The last 6 weeks have seen the market move back like this, and it's not looking anywhere near as strong as it has done previously. This weakness has allowed some of the associated markets, particularly the currencies, to move higher in response and gain a little bit of the lost ground back. Next chart is the E-mini S&P. This is S&P 500 index futures. And if we just put in the highs of the range, they come through here. You can see the market pushed just above these levels a month back, has tested for supply for 2 weeks, with last week being reduced volume and back to about average. And this week the market has just floated up on reduced volume and has regained its position back above the highs of the range, which was in here. So this market's just edging higher, it's floating higher, mostly on a lack of selling pressure more than serious underlying demand. And that means that if the market did encounter some supply, it would more easily come back. It wouldn't be defended as strongly as if demand was really strong. But at this point, the market is floating higher, mostly on a lack of selling pressure. 10-year note futures dipped lower this week and recovered. The important level comes through here. You can almost see the market is pressing higher with a positive nature just through here like this, almost a bit like some bullish absorption as price attempts to move above this older breakdown line here. In some respects, it's absorbing its way through the line rather than accelerating through the line. Price pulled back this week and recovered nicely to close up near its highs and slightly as an up bar for the week. So that's quite promising and suggests the market may attempt to continue higher in response. Copper price futures pushed higher this week, but then encountered some supply. Highs of the range come through here. You can see the market made an attempt to break out this week on very strong volume, but it did encounter some supply to close off the week's high. Shows you that supply was drawn out. The most likely response is an early test for supply, which is quite common in these markets, and then a further response depending on how much supply is actually drawn out. The fact that price did close higher this week, despite the supply being drawn out, was a minor positive and suggests there is demand in the market. Gold price futures also pushed higher this week, but encountered some supply. The close well off the week's high on about average volume suggests that the supply wasn't overwhelming, and you can see the market did close higher this week despite the supply being drawn out. Similar to the copper price futures, whenever supply is drawn out, the market usually pulls back a little and tests for supply just to see how much supply is actually in the market and to see whether the supply chases price down as it moves lower in response. And following the test for supply, usually within a day or so, the market will either encounter further supply and come back even more deeply, or supply will dry up and the market will attempt to push higher in response. So that's why I say that the market will test for supply and then respond depending on how much supply is drawn out. Silver price futures, similar to copper and gold, attempted to push higher this week, but did encounter some supply. The highs of the range come through here. You can see that price pushed out and above this level 3 weeks ago, spent last week absorbing supply. There was a little test for supply as expected below the previous bar's close early this week before an attempt to push higher, but the market did encounter some supply, similar to the other two markets, with a mid-bar close on an increase in volume. So once again, the most likely response is a little pullback early in the week to test for supply, and then the market will respond depending on how much supply is drawn out. Like crude price futures, draw in some lines. Here's the lows of the range. The highs of the range come through here. The range above through there. The market didn't move much lower this week. There was a reluctance to move lower. In fact, there's been a reluctance to move lower over the last 3 weeks, really, but particularly over the last 2 weeks. Volume reduced this week. Price made a half-hearted attempt to move higher and then faded lower as the week moved on, which is often an absorption type pattern where the market pushes higher and fades lower, which is often used as a way of increasing one's position. So just watch for the response. There may be a push up to the highs of the range in response. I'm not expecting any great amount of demand to emerge, but it did look like selling pressure reduced and the market showed a reluctance to move lower this week in response. Onto the currencies now. This is the Euro-US dollar currency pair. Here's the lows of the range through here. There was a reluctance to move lower through here, and there was a response to that reluctance to move lower. Price then came back and tested the lows of the range before pushing higher this week on reduced volume. So the market really floated higher this week on a lack of selling pressure and the weakness in the US dollar to some extent, rather than really serious demand. I expect this market will trade the inverse of the US dollar to a large degree next week. The actual fundamentals in the Eurozone aren't really playing a great part in this market at this point in time. British pound currency futures, lows of the range through here, a reluctance to move lower here, a push up to the lows of the range, test for supply, a bit of an awkward looking shakeout or a deeper test for supply, however you like to interpret that, and then a push higher this week, also on reduced volume. So it was a float higher, it floated higher on a lack of selling pressure. You've got a little shelf that comes through here, and that's where the market's pushed up to this week. Similar to the euro, I expect this market will trade the inverse of the US dollar more than the fundamentals of the actual British pound, at least at this point in time. Japanese yen currency futures traded inside the previous bar's range this week as an inside bar. You have the lows of the range through here, a little bit of absorption and a push higher. And this week, you've actually had a test for supply for the whole week, and supply was found to be low. So this allows the market the opportunity to push higher in response, especially if there's continued weakness in the US dollar. You've got the highs of the range coming through here. So there is some room to move if the market does attempt to push higher before there's overhead resistance that may increase. So there's a chance this market will push higher in response. If trading conditions aren't favourable, I would expect a secondary test for supply, generally with a narrower spread and reduced volume. Aussie dollar currency futures, similar to the previous pairs, this market floated higher more on a lack of selling pressure than true demand, although this market did have slightly higher volume than those other previous markets. Price is holding on to the 62 cent level at the moment quite well. This is an important level, and a breakdown below this would see price really slice lower to below 60 cents more likely. So this is an important level for the market. You've got a breakdown line here. There was a reluctance to move lower through there before price pushed back down to the 62 cent level. Minor highs of the range through here, so the market's just testing that this week. I'd expect price to come back a little and perhaps trade like that, at least early in the week. It will also depend on how much supply is drawn out and how the US dollar trades, because this market will also trade the inverse of the US dollar to a large degree. Bitcoin futures. Bitcoin futures traded inside the range of the previous bar this week. Lows of the range come through here. Highs of the range through there, like that. Weakness emerged here and here. Price pulled back to the lows of the range and tested it for strength. And this week you've had an absorption bar within the range of the previous bar. It's effectively an absorption bar. It's not really a test for supply. Test for supply really is a narrow spread down bar closing mid to high on reduced or below average volume. And it traded as an up bar for most of the week. Volume was low, so there wasn't that much supply in the market. And this should allow the market the opportunity to push higher if it can rustle up some extra demand. Not necessarily to break out, but to push up to this level or this level. Shouldn't be too much of a challenge for the market. So the opportunity is available for this market to push a little higher within the overall range. Remembering the overall range is between here and here. So the fact that volume was low this week suggests that selling pressure was relatively low. The market comfortably absorbed the supply being drawn out, and that should offer the opportunity to push higher in response. Just back to the US dollar index futures quickly. The colour chart's probably better. You can see where the market is. It did close below the previous support level here this week, so it's threatening to break down. It hasn't actually broken down yet, just threatening to do so. And this would be a minor breakdown within the range. The more serious level is here, just below 106. A clear break and close below that level really would be damaging to the market. Would probably see price move considerably lower. Okay, thanks for your time. I'll be back again next week. Thank you. See ya.